Ron, as you look at this week, I know you're a student of market history. What in the price action, the volatility, the ups and downs, what is it telling you?
Well, Tyler, I think these are bear market rallies until proven otherwise. I mean, you get these big snapbacks. Kelly was just pointing to a handful of stocks that have done extraordinarily well today, but there's probably a lot of short covering going on where those who were short those stocks are taking profits and getting them to pop back up. Fed's still raising interest rates. There's no change in that. And I don't know of a bear market that ends while the Fed's in the middle of a tightening cycle. Usually the market has to be convinced that the Fed is coming to the end of that cycle. And we still have the other factors like Russia and China's lockdown to contend with. So my guess is that this is a bear market bounce until proven otherwise.
So Ron makes the point that kind of you don't fight the Fed on the way up and you don't fight it on the way down when stock prices are going down. Do you agree with that? And the idea that you can't be confident that the market is bottoming until you start to see some signal that the Fed is stopping its tightening cycle. That's number one. But that doesn't, even if you buy that, that doesn't mean there aren't things to nibble at today.
I agree with that. I mean, Ron's right. We are in the middle or early stage. We don't know, but we do know rates are going to go up. We know quantitative easing is coming off the table. But as we've always talked about, it's impossible to time the market. We're off 16% of the highs. The PE multiple of the market's still pretty high, but absolutely, there are companies now that have come down a lot more than the market has. And, we talk about the stock pickers market. And if you're going to buy companies, just like if you did in 2020, if you start buying them now or nibbling at some really high quality companies, you can actually dollar cost average in. I'm not saying put all your capital in now, but you can definitely get opportunities, not in days like today, but the whole last week we had before.
I'm going to come back to you and get a couple of those names in just a moment. But before I do that, I want to turn back to Ron and ask you, Ron, what you think of crypto right now.
Same thing. I've thought of it all along, Tyler. I think it's, maybe one, still a solution in search of a problem. Two, far more levered than some people would have realized, particularly when it comes to these algorithmically driven stable coins. And three, look, at the end of the day, regulation will out. And so you can trade this stuff. I've got a 20-year-old son who's trading it, for fun and potentially profit. And I encourage him to learn what it's like to see things go up and down by this amount on a daily basis. Just as a learning experience. I still don't understand the use case. I have been 1,000,000,000% wrong on price, but I don't, aside from, radical shifts in payment systems, the important and transformational features of the blockchain itself, those things are all important. The 12,000 cryptocurrencies or crypto assets, whatever they are that exist. Look, if you didn't see this coming, you kind of had to be blind. And that's true for the bear market in stocks. It's true for the bear market in meme stocks. That you recall that I got into a rather high-profile Twitter war a couple of years ago about day trading, all this stuff. Thought it was a bad idea, still do. And I think you just have to be careful with this stuff. You have to be a pro to really make money in something this volatile.